Hello, this is TJ with the Counterpunch Trader and netpicks.com. It's the day after Labor Day weekend, and I thought I would walk through today's trades with our main trade plans. The trade room was not open today, so I thought it would be helpful just to walk through a variety of charts and trade plans that we typically trade every day with the Counterpunch Trader. And what I like about today's session is that it's a great glimpse or a great look at how we can use the exact same set of indicators and the same trade plan, basically trade it the same way on a variety of different charts, markets, etc. So let's start with the market that traded first, and that would be DAX Futures, which traded during the German session starting at 9 a.m. this morning, Eurex time, or 9 a.m. German time. All right, so here we are at the beginning of the session. You could see this bar on the right. It's at 8:39. We typically start at 9 a.m. exchange time, right? Everything is always exchange time since there are exchanges in different parts of the world, and our members are all over the world as well. So to avoid confusion, we always set our charts to exchange time. All right, so starting at 9 a.m. and we're just waiting for the first trade. Still nothing. And finally, you're going to see this would have been a nice trade. It was a nice short here, and it hit its targets and everything. But it's filtered out. That's why it shows up in gray. And the reason why it's filtered out is because with this particular trade plan, we use what's called trend mode. It's a particular way to trade the Counterpunch Trader. Basically, it's simple. What it says is that when the line is blue, you can only go long, and when the line is red, you can only go short. So this is a potential short, but the line is blue. Same with this one. And by the time it turns red, it's already gone too far. So we're still waiting for a trade. You can see some long trades here. Now, it does turn blue for a moment, and then there's a long trade, but it closes below. Typically, when it spikes through an entry, on the next bar, I'm not going to get long right at the entry. I want to adjust around what the price action is telling me. It's indicating a near-term resistance level right here where it spiked up and got rejected. So I'll adjust this entry to one tick above the spike right here. You see? Something that we teach in training. We have to be able to dance with the market. And our histogram is showing very low volatility. This is the high trend indicator. It tells us what's occurring on a chart 5 times higher. So 233 tick times 5 basically. Okay, and you can see it's fairly flat. So I don't want to be in a hurry to jump into a long trade right below near-term resistance, right? To me, it's just common sense. So a small adjustment, and what happens is it does tick in, and it would have triggered in, but then it heads lower, and you can see it's already red. Remember, we don't want to go long when the line is red, but the adjustment above that little spike is enough to keep us flat and out of that trade. And then you get a short instead right here. And it turns out at 9:37 that this will be the first trade of the day because it triggers in. You can see the entire trade right here in the data window, targets 1, target 2, target 3, how much your reward is to each target, what you're risking, etc. Okay, so it comes down. Well, first it comes back up, and it looks like this might be a choppy market the day after Labor Day and not a lot of volatility on the higher time frame, but it ultimately works its way lower with a big strong move down, and you see it hits target 1. The stop is going to move down and start trailing our momentum indicator, the blue dotted line. So now it's risk-free, and then of course the next bar it stabs down and hits target 2. That's our ultimate goal. We either want to get 2 trades to target 1 or 1 trade to target 2 and be positive, all within 5 trades or less. And it so happens, and we see this a lot, that it happened on the very first trade. So the goal is reached for this trade plan. Of course, additional positions you can trail, and you can see the stop hasn't really moved much further, but it looks like it's going to come down, but then the price just zooms back up again, and ultimately stops out right here. So there's a reason why we want to take the risk off the trade, but still we're able to pick up a nice target 2 winner, 53 ticks. That's 26.5 points. Each point is worth 25 euros. So that's a really great trade. And so that's the first look at our earliest trade plan this morning with DAX Futures. One trade finished and a nice winning session to start the week. Moreover, that trade made new all-time equity highs. It made the highest profit level for the life of this particular trade plan. About a year and 4 months worth of trading with this plan. All right, let's look at the next one. All right, let's look at the British pound. We'll look at the European session. It starts at 2 a.m. Eastern Standard Time. This is using a 5-minute chart. It's just your typical Forex day trade plan using trend mode, using the standard settings. So the European session starts at 2 a.m. So we're looking for our first trade, and you can see it's right up here. Let's see if it triggers in. It ultimately does. It does come up and it hits it. Remember, when it's blue, you go long, and it's a small trade. Normally, we want to take profit at each target. 25% comes off at each target, and then we trail the remainder. But we're going to ignore any target that's less than 10 pips, right? It's just not worth our time. Target 3 is 11 pips. So we're going to literally take off target 1, target 2, and target 3, all at target 3. So 75% of the trade will come off at target 3. Not a big trade, of course, but you know what? You take what the market wants to give you. It's our long-running approach. It continues to work for us. And you can see it comes up and it hits all targets. So 75% comes off here with its 11 pips minus spread. Not that much, but you have the chance to trail, and the stop is already moving up, and it comes up a little higher, not much. Ultimately is going to stop out. I mean, that's all the market wanted to give us, but it's still a winning trade, one and done. And remember, it's adjusting to market conditions. It's a dynamic strategy. Other trades will be quite larger. In fact, if we look at the US session, which starts at 8:30, let's just zoom on over. There's a nice trade. This white trade over here triggers in, keeps on going, but we're waiting for 8:30. And so 8:30 comes, it's 8, 9, 10, still no setup until here. So the first trade of the US session happens at 9:25. There's nothing new to learn, but look at the size of these targets. 20 pips, 28 pips, 35 pips. And it triggers in and it zooms up. 25% off comes off here for 20 pips minus spread. Second target, 28 pips minus spread. Third target, 35 pips. And then look at the trailer. The trailer is able to catch a nice move up all the way to here. I mean, this is a triple-digit gain. That trailer made, I don't know, 70, 75 pips, something like that. But look at how the momentum line marks the balance between buyers and sellers, tracks the trade all the way up before it starts heading down. Great trade, one and done. Notice I've shown you 3 sessions, 3 trades, finishing, hitting its trade plan with the very first trade. That's it. We don't keep trading. We've hit our goals. See you tomorrow. All right, let's look at the next market. All right, so we're going to look at crude oil. Crude oil futures starts at 8:50 Eastern Standard Time. Can you trade it earlier? Yeah, you can. There's a lot of good trades in the pre-market. You could trade it later too, but we stay consistent, do it the same way each and every time. And so we're waiting for our first trade at 8:50. It's come down quite a bit, and then finally we get a short right here. And that's at 8:47, but at 8:50 it's able, well, it's still 8:49, but at 8:50 right in this bar right here, we're at the entry and we're able to take it. So this is an interesting trade, and what we learn is we stay with the trade, of course, but notice how it ultimately comes down. Now, I made an adjustment in the calculator. Let me put this to what it should look like. All right, I'll take the opportunity to teach you what we could do with the counterpunch. Just like on the DAX, once it spiked through the entry and then went up again, I didn't want to get short right at the entry. This could be near-term support. So I made a little adjustment. We got down a couple ticks, 2 or 3 ticks below the spike down. All right, so that's the adjusted entry, and it ultimately gets short here. And then we have a long trade, right? But we also adjust the long trade. We have a principle that we want to protect the trade we're in, which is short. We also want to respect the fact that the market might be turning up, but we don't want to just jump right into that entry. We want to make a small adjustment. And so the adjustment per our trade plan rules pushes this up to 44.26 up here. Okay? And you know what? We do this for a reason. It never gets up there and instead goes down. So remember, protect the trade you're in while respecting the fact that the market might turn higher. Of course, the trend is down. It stays down. This trade stays short, comes down, and comes up again. But remember, the stop is up here. And ultimately it comes down. With patience, it finally gets to its target 1. So you would move the stop at that point from here to here. And then target 2, and our ultimate goal is reached. So another trade, one and done. This is how you navigate through choppy trading. You have to follow our rules. Use some sensible ideas that we use, and we do it the same way every time. Remember, consistency is key so that we can continue to get measurable results that we can compare and contrast. So remember how it looked before? We can go into the calculator, and we could literally on the fly while this trade is going, we can make the stop and reverse adjustment. We can call it 2 ticks, for example, and you see how this is where it could have stopped and reversed. Notice it will go away once I put that adjustment in, because we're not interested in that trade anymore. So now the calculator is still tracking the short trade. You see how the trailer comes and then it finally pushes down when the price comes down and hits target 1. So the calculator itself is very powerful, and you learn how to utilize some of these tools while you're trading. It's all part of the training, of course. So you can see how it comes down and ultimately is going to stop out right here. It's not a big trade because we made the small adjustment getting short as well, but it still ends up being 14 ticks to target 2. And best of all, it's one and done. I mean, you hit the goals, taking what the market wants to give you. You do not have to keep trading. See you tomorrow, right? That's how you grow your equity. Of course, as your account grows, you can increase the position size, use the power of compounding, and like this, ultimately we can get to our critical mass by not trading more, but by trading less but smart, with real good trade plan rules that continue to win consistently, session after session, or at least a majority of the sessions. So that's all you need to succeed with trading. Let's look at a couple more examples. All right, so here's a look at the Dow eMini using the 377 tick chart, and we start at 8:30 Central, right? That's when the stock market opens at 9:30. So that's right around here. There's still no trade to be had until we get, well, first of all, we have to get to the right day because this is the 5th. It's a holiday, so here we are on the 6th. And here we go, 8:30. Looking for a new setup. There's a long trade there. It's going to cancel. Now we get a short trade instead. Notice the line turns red. We're using trend mode. You can only go short when the line is red. And that ends up being the first trade of the day right there. Very clear. Nothing new to learn. Your targets. You move your stop when you get to target 1. You exit at target 2. Optionally, you can exit at target 3. You can also trail the momentum line. Lots of ways to trade it. The high trend is heading lower. Everything's in our favor. And it does push down. Hits its money management level on the nail. Look how accurate that target is. The stop pushes down. Starts trailing the line. That line also very accurate, marking the line in the sand of power between buyers and sellers. And it pushes lower. Hits target 2 perfectly. Look at that. Another perfect target. That's our goal, right? One trade. It ultimately pushes up and stops out. That's all the market wanted to give us. but following our rules. First trade of the day for us, start time, hitting our goals, one and done, and this trade broke out to new all-time record profit levels for the life of this trade plan, which is over 2 years old. That's pretty remarkable. New record profit level on this trade plan, one and done. I mean, so far everything I've shown you today was one and done, and I'm not showing you anything different. Same trade plan, same everything, same configuration with the indicators. This is how versatile the counterpunch is. Let's look at one of my favorite markets to trade, Soybean Futures. What I like about Soybean Futures is that it trades similar to the ES. It's $50 a point, $12.50 a tick, but it's so much easier to succeed with soybeans than it is with the ES. So we start at 8:30 Central, trades out of Chicago. So we're looking for our first trade of the day. And with this trade plan, we just take one trade. Win or lose, that's it. One trade. You could trade up to 4 positions. Target 1, target 2, target 3, and trail. If you only trade one position, you trade to target 1 or target 2, okay? But ultimately, one trade, that's it. And then you're done till tomorrow. And these trades can happen very quickly. You could be finished in a matter of minutes. So you have a long trade here, but it's filtered out because we're not using trend mode. Actually, we don't need this line. Let me turn it off. But there's another filter at play. You can adjust it. But this trade ends up being a full winner, as you can see. It comes up, goes all the way up. But we're not going to count it because of the filter. It's in gray. We don't take it. We want the full color trade. So then we get this one. And it's at 856. And so that one's going to come up. It hits target 1. Well, that's good for 1.5. It's good for 3.5 points. Right? Not bad. 14 ticks. The trailer's up. And notice that it's behaving exactly the same as any other chart. This is using a 5-point momentum range bar. Does not quite get to target 2, but the trailer protects the profit. It ends up stopping out with the remainder here for a partial profit. But it's still one trade, a winner, successful, and this strategy has won 30 of the last 35 sessions using one and done. That's it. Win or lose. Imagine that, winning 30 of the last 35 sessions. You can build a business with a trade plan like this. Best of all, in at 8:56 and out at 9:14. It's like a 20-minute trade. All right, we're going to look at just one more, the Russell eMini. Well, this is a chart that I've been following now for quite some time. It's actually an 8-tick range bar, but I just started officially tracking it about, 6 weeks ago. It's done nothing but win, win, win. Today made new equity highs. Granted, it's still kind of in the experimental mode, but so far I really love what I see. Starts right at 9:30. So there's a short trade right here. And as soon as it triggers in, it actually triggers in on this green bar, right? Because when the bar closes down here, then the entry becomes valid. It comes up. You could trigger into the trade. It looks like it's going against you. But look at the stop. It's there for a reason. And it holds. And then it pushes. Basically, looks like it might go long, but instead it goes down. And it comes down ultimately and hits target 1. After all that up and down, up and down, up and down, it hits target 1. The stop moves down, locks in a little bit, and then it comes up and stops out. Remember what I told you, the typical trade plan is 2 target 1 winners or 1 target 2 winner. So this is the only market today where we actually had to take a second trade. We were literally one and done on everything else I showed you. So now that this trade is finished, we have to wait for one more. Now there's this green trade right here. You see how it triggered in? The stop is up here. So when the white trade gets out, if price comes down again, unless there's a new short trade that forms, we can take this trade because it fits within our rules of being able to get in synchronization, get in sync with that trade. And it does, and it pushes through, see? And then it goes back and forth. Now there's more trades, but we're in this one. Right? Because that's the next trade in the trade plan. And it ultimately looks like it's going to come up. But just like I showed you how we adjust in crude oil, this this long trade, we're going to respect the short trade, protect in case it's going to go long, and this entry gets pushed up to 1253.6. That's just the rules we follow. We're not making it up as we go. We do it the same way every time. We do it for a reason. It stabs up. It doesn't hit where the adjusted entry is, so we stay short. And then it pushes down, hits target 1, hits target 2, and ultimately it's going to stop out at this trailer right here. But it's a full target 2 winner. We had a target 1 winner, target 2 winner, and ultimately it's a very successful session on the Russell eMini, which also hit record profit levels for this particular chart since I've been tracking it. So a completely different look and feel, of course, but you can see that we've got smart rules. We have a way of handling certain situations. These situations can really be difficult. If you're at the right edge of the chart and you don't know what to do, here's a long trade, you're short, you don't know what to do. You have to follow rules that are well tested, and then you do know what to do. That's the whole point. You want to know what to do with each and every situation. That, of course, is also part of the training. More importantly, it's part of being a professional trader so that you can get the statistical advantage that the strategy and the trade plan gives you. So if you know that you're going to win as often as this strategy and trade plan wins, you learn how to remove yourself psychologically from the equation, and ultimately you follow our motto, which is you lean on the system and let the system do its thing. That's precisely what we do with our rules, with our trade planning. We do it the same way every time, no question. And you could see all these different markets. There wasn't a lot in each market, but there was enough for us to hit our profit level, take our money, step aside, and walk away. And that's one of the main secrets to success. It's part of being a counterpunch trader. I hope you enjoyed these examples from today's session. We are having a flash sale of the Counterpunch Trader this Thursday in 2 days. We're only offering it for 24 hours. It will be the lowest price we have ever offered the Counterpunch. You want to take advantage of this, at least register for the webinar so that you can get more information, see it live, ask us questions live. Perhaps this is the strategy for you. I really appreciate your time in joining us for this. Thank you very much. This is TJ with NetPicks and the Counterpunch Trader. I hope to see you at the webinar.